Governor of the Bank of England, Sir Mervyn King, has told the Commission on Banking Standards that reforms involving the ring-fencing of high street banks must be implemented soon. Sir Mervyn said that plans set out by the government after a report by Sir John Vickers should be adopted. But he said the arrangements should be reviewed at a later date to check they were working properly. Well, Chris Roebuck is a professor at Cass Business School. He's also previously held senior leadership positions at a number of international banks, and he joins me now from my studios at the London Stock Exchange. A very good afternoon to you, Chris. I mean, it seems so simple, doesn't it? Separate retail from investment banking. Why the delay?
Well, I think the problem is, as with all elements of banking now, that it's not just about the structure, it's not just about the finance, it's actually a political issue as much as it is a financial issue. And therefore, what has to happen is that all the political ducks, so to speak, have to be lined up as well as the financial ducks. But to be honest, it's like any form of change or project. You know, let's be blunt, you shouldn't be sitting on the fence, you should actually do something and get it done. And exactly as Mervyn says, then on a regular basis review its progress and update as necessary.
But it's also a question of trust as well, because let's face it, the public are very sceptical, some would say justifiably, about the banking industry. So that's a spur to move quickly on this, surely.
Well, that's one of the spurs, but I think what we need to remember is that we shouldn't take an insular view of this. Similar discussions are happening in every single financial centre around the world. New York, Zurich, Singapore, Hong Kong, etc., etc. And all legislative areas are looking at how they can ensure that the banking industry moves forward and we don't get a repeat of the financial crisis. So it's not as if it's just the City of London that has done things wrong. Banks are being investigated around the world. And one of the challenges that we have is to take a broader view to say, actually, this isn't just about UK. We have global banks. And if we want this to stick, it has to stick globally as well as in London.
You're intonating there about a real sense of change that's happening in the culture within the banking sector. How much of a change is it? I mean, you're in a unique position because you've been there at the beginning, and now you can look at it from the outside.
Well, certainly there are a number of key things that have changed. One, the economy has gone downhill dramatically. And what that's meant is that many banks are looking at businesses they previously used to do and saying, actually, this isn't really worth doing anymore. So there's structural changes. In addition to that, there's additional requirements from the EU in relation to capital they have to keep for a rainy day, which is also altering the landscape. And there's issues about remuneration. You know, for example, they are clamping down on bonuses via the EU, yet in Asia and in US there is no clamp down on bonuses. So that there are other issues that are changing the landscape. And what's happening is that the banks are having to change because of that. And also in many of the banks there's been a change of leadership as well. So the whole landscape is having a significant change, and by the look of it, for the better.
A significant change, yes, but tangled as well in the way that you've depicted it, which leads to the possibility that there are islands of good practice with some banks, but perhaps others which are falling by the wayside and, if you like, letting the good guys down.
Well, certainly, you know, one of the issues is what we have to remember that within London there were a very few people that did things wrong, and most people have behaved with utter integrity and professionalism as the city expects. And actually, you know, we need to stop knocking the city, because every time we knock the city, if it sends business to New York or Zurich or Singapore, they are very happy. And for example, their newspapers don't knock their financial centre. But the real risk, I don't think, is necessarily in Europe or the US, because the volume of money that is moving into Asia and some of the regulatory structures in Asia and the cultures in Asia may mean that the big risk is not here anymore, but the big risk is out in Asia in terms of their level of competence and regulation.
OK, a conversation we're going to have on another day. But Professor Roebuck, thank you so much for joining us with your analysis of those thoughts there from the Bank of England Governor, Sir Mervyn King.